If you've become a bit disenchanted with traditional investments like stocks, bonds, and mutual funds, you may wonder, as many people have, whether it's possible to broaden your IRA account to include unconventional investments. And the answer is yes. By opening a type of account known as a self-directed IRA, you can expand your investment options well beyond the big three of stocks, bonds, and funds. To get an idea of just how broad an investment palette you can access, Google the term self-directed IRA and you'll get links to dozens of custodians who will gladly help you set up a self-directed IRA account that will allow you to invest in everything from real estate to foreign currencies to tax lien certificates, even certain types of gold and silver bullion and coins. Question is though, just because you can stash all manner of exotic investments in your IRA, does it mean you should? I think the answer for most people is that the risks and uncertainties of filling up your IRA with, shall we say, more unusual investments very likely outweighs the potential rewards. Why? Well, one reason is that interest in many of these types of investments tends to peak after they've had a huge run-up in price. That's certainly the case with gold, which has recently surged to more than $1,400 an ounce. It's also important to remember that unlike stocks and bonds that are bought and sold on exchanges where price information is readily available, many unconventional investments are traded privately, which can increase transaction costs, make it more difficult to know whether you're getting a truly fair price, and make it harder to know whether you're getting full value when you're selling. There are also a number of practical considerations when you're dealing with IRAs, which are subject to a number of restrictive regulations. For example, when putting single-family homes and rental properties into IRAs was all the rage 5 years ago, I wrote a column explaining that if the rental home in your IRA required a substantial repair, paying that amount from your own pocket would put you in violation of IRA contribution limits and possibly subject you to heavy penalties. So before you go buying structured settlements or accounts receivable or parking spaces or some other alternative investment with IRA funds, I recommend that you first ask yourself a few questions. Are you doing this because it really makes investment sense? Or are you fascinated by the novelty and adventure of dabbling in new waters? And do you really know enough about these investments to understand the potential risks and the true costs of getting in and out? If you still decide to proceed, then at least limit non-traditional investments to a small portion of your portfolio. Don't make them your major holding. And before you buy anything out of the ordinary, make sure the investment isn't on the IRS list of no-nos for IRAs, which among other things includes collectibles, rugs, antiques, gems, and artworks. Bottom line, diversification is generally a good thing when investing in your IRA. But as with any concept, if you take it too far or apply it incorrectly, you can end up doing yourself more harm than good.